Eric Mwathe here. So as a follow-up to the previous video, just quickly here we talked about the fact that if you're looking to go long a stock, the best time to use the MACD is when the crossovers take place above zero. So if you want to go long a stock, your best chances of a good signal to the upside is a crossover when the MACD crossover takes place above zero, and you really want to avoid crossovers that are taking place below zero if you want to go long. That's generally what we're talking about here, and like I say, we're going to have a couple of videos on this MACD topic so we can bring all these aspects of the MACD together. So you want to go long, wait for this crossover above zero, it's a better signal. On the same hand, if you want to go short a stock or you want to sell and get out of a stock, your best chances of a successful MACD signal is when the crossover takes place below zero. So you want to sell, you want to go short. Your most powerful crossovers are when the MACDs are crossing over and they were already trading below zero. If you try and short a stock when the MACDs are trading above zero and the crossovers are taking place, that's not your best chances of a good signal. And of course, we touched on the idea that if you want to go long a stock and the MACD is below, or the MACDs are trading below zero, your best chance is to wait for this break of a trend. Like in this instance, this trend break here lower, so this crossover is more successful more often than not because it's breaking a trend on the MACD, so the sell-off is more powerful, the crossover tends to be also more powerful. Same time, if you want to go short a stock, your best chance is to avoid shorting or selling a stock when the MACD crossovers are above zero. But really, if you want to get it right, is you want a trend break to the upside where the MACD really powered ahead this trend, breaking above that line, and so your next crossover is more successful. And that's what we talked about in the previous video. Now in this video, I want to bring on another idea here, and it is, let's say this is a zero line on the MACD. Let's call that the zero line on the MACD. And what I want to bring here is watch out for crossovers that are uniform. In other words, uniform below the line and back above it. So let's say there's a crossover, change the color here. So let's say it does something like that. And so what you get here is uniform activity. It's uniform below the line and back above it. Very nice action. Whenever you get a crossover like this, these ones tend to be absolutely powerful. For some reason, this symmetry tends to give very powerful signals. And the same is true, for example, if you want to trying to get out of a stock and let's say it moves above the zero line and back below it in very uniform action, and see here, and so you have another crossover. What I'm trying to talk about here is if it is uniform activity above and back below the line, they tend to give you better signals. So we're going to use an example here to show that aspect of trading, that uniform activity back above the line or through the line and back above the line gives you a better signal. On the way up, if you have uniform activity down and then up, nice action, that's a bullish signal. If you have uniform activity above the line and back below it, that's a very bearish signal. So we're going to go into some examples here. But before I do that, why don't we talk about another aspect of the MACD? And it sometimes can get confusing, and I want to clear something out here for all of us to kind of grasp. Is whenever you have a crossover that looks like that, let's say, let me draw the next line so we can see what we're talking about. So whenever you have a crossover and let's say the MACD lines hug each other for a while, see, that's not a crossover. What we're talking about a crossover is when you get that separation. So watch out for the separation. This separation between the line confirms there was a crossover, because sometimes what stocks do and they confuse us is you'll see a MACD, you'll see something like that, let's say for a moment here the MACDs just hug each other, so you don't get any signal. So wait until you see that separation. So this separation between these two lines here is what confirms a crossover, and sometimes it helps you from taking action when there's a weak MACD signal. So let's go to the example. And we have here the Nasdaq weekly chart going back 3 years. Nasdaq weekly 3 years. And let's go here and take a look at, of course, this market has been steaming ahead over the last 2 years or so. Very nice action. You want to take a look at the MACD crossovers. Crossover above 0 is this area here for a successful move. Crossover above 0, successful move since then. And notice we haven't had any other MACD crossover, bearish or bullish. As you can see here, the MACD never crossed over because there was no separation to the downside, and here never crossed over to the downside. So there's really never been a sell signal ever since this MACD crossover here. So that's important. Now take a look at how this MACD, this is very important here, because in the previous video we talked about when the MACD slashes below 0, you get a big washout, just like when it slashed below 0 here. Take a look at this big move here in price. So you really have to be careful. If you are long and the MACD slash below 0, you have to be careful, because that's really suggestive of a big down move. But here the MACD can play a game, and what you notice is that it's just about to crack, but it held. And the next crossover after it has held this support line here tends to be very powerful, because this was a trap area for anybody who shorted the market, because note that very close to breaking below 0, and then support at the 0 line, and then a crossover coming place with a separation. So this MACD crossover was always going to yield a powerful move. Remember, we are looking at weekly charts, so that was a signal that would have been good for the next couple of weeks and for the next couple of months. So now let's say you wanted to, let's say it was February of 2013. You see that there was a period here where the MACDs were really looking like they were crossing over to the downside, here crossing up to the upside. It seemed like it, but there was no good separation. So what we are learning here is, whenever you see this type of action, ignore this, because this is very confusing. So this period here would have been ignored right there, because those crossovers did not have separation. What we are looking for is an obvious separation. We want separation to take place. So that would be a crossover there. But if we find that there's something like it's hugging each other here, we don't call those a crossover. So we ignore such types of signals. And you'd have noticed it would have been obvious here that after this period of confusion here, this market would cross over there, and the crossover was taking place above 0 on the MACD setting. So crossover, nice crossover with a separation here, and that was this entry point here with a breakout in price. So everything was taking place, and that would have been another indication of a strong market, and would have helped investors stay long the market. And you see every subsequent crossover above 0 here, which was this low here, crossover below 0, which should have been this low here. Now I can even say that this most recent crossover here was not the best, because we don't get a very good separation. So you know, if you go back to crossover plus separation, you see this was a better entry here. Okay, so nice example here on the Nasdaq weekly chart. Let's take a look at another. See, there was a trend. These 2 points make a straight line, so they make a straight line. Continue that line. You see that we broke below that trend. So this crossover here, because it was below the trend, was going to be a successful buy signal. And you can see that it's very accurate, because ever since then this market has not seen these prices and has had a nice run. So that's one way to do that. Also consider the fact that during this crossover here, there was MACD support, and then a crossover. So let's say you did not take advantage of this crossover here, you would have been very convinced that this move was going higher because there was a crossover above zero there after support, and also a move back below zero on the MACD line on that MACD time frame. So remember, these are two MACD settings because I like them to clarify what's going on in terms of market direction. So now here's another good example of how to use the MACD. We see that there was this higher high, and we all know about negative divergence. So it was a higher high and a lower low in the MACD crossover. So because there was a lower low in the MACD technical trading here, the crossover here tends to be a little bit more predictive. That's why we have this move lower. Same time, if you take the other MACD setting, is you have lower MACD highs, and so this crossover here tends to give a better signal to the downside. So that's how you can use the MACD setting. Now, as far as uniformity is concerned, take a look at this. Is we have what seems like a V-type formation, very uniform V-type formation. Hope that makes sense, right? This looks like a V, and it's very uniform because if you draw a line smack in the middle of this, you see that it's almost equal weight on this side and this side. Okay, so that is what I call uniform action. So whenever you see a MACD have uniform action, let's say below a line and back above it, this move back below zero tends to be a buy signal, which is this general area there. Again, you have another uniform activity here, looks like a V. So next time you come back above zero, that is a good entry point. Since I don't want to waste a good example here, is in a subsequent videos I'm going to talk about the MACD failed crossover here. So the MACD would cross over here, move higher but stall. So your next, and I'll discuss this in a separate video, is so this node, this high, becomes a level to watch. Is once you break out above that level, that becomes a buy signal. So this would have been a buy signal here, which was also this entry point, very nice entry point. And also notice that you could have used this crossover and attempt to move above zero, failed, moves lower, breaks out. So this was another breakout above that level there. So in a subsequent video I'll talk about the MACD failing to move higher and then finally crossing above a previous MACD short-term high. So I won't go into detail, but this is a good example of how you can use the MACD after a failed attempt to cross over. But we'll discuss that on another video. Now let's take a look at the Nasdaq 1-year daily as we continue here with the examples, and without even going into too much detail or research, I see that there was an attempt to move below zero here that failed, and a crossover that took place after that. There was a move above zero here, so this was definitely on the daily a nice entry point. Now you see that there was a break, which would have been a sell signal, but notice how the market made a nice uniform activity back above the line. So it looks like a U-type formation here. Hope you can see that. So this market, the black line has a nice U formation and the brown line has a nice U formation. So that's uniform activity that I talked about. And so any crossover after that and a move back above zero is a good signal. And so that is July. Notice that that was a very nice entry point in the market. Now take a look at the other crossovers since then to the upside. Crossover above zero tends to be more successful, which is this entry point here. Crossover above zero, which tends to be successful, and yes, it was successful in that time frame also. In fact, if we go back and take a look at all the crossovers above zero, like here, nice entry point there. Crossover above zero here, nice entry point here. Seems very simple, but it is what it is. Also, a crossover here, beginning of the year, was a nice entry point there. So we can use this area above zero to really confirm that any MACD crossover that takes place there to the upside is going to yield good results, especially in a market that is already trending higher. Now remember, we're not considering other factors here. So this example is just MACD. I've stripped off all the other indicators we could use, like the RSI. So we are looking at one indicator, and it still seems like it's giving us good signals. And also, just to bring back the idea I touched on earlier that we will discuss in a separate video, is the idea that you get a crossover here and a short-term breakout there. So above this high node here. So this was also an entry point there, which is September. Nice entry point there. So we have, and every time we have these crossovers, to me the thing that confirms momentum to the upside is you have a crossover and a move above zero here. You get a crossover here and a move above zero there. You get this nice crossover here and a confirmation back above zero there. So momentum to the upside. Same thing here, you get a crossover and a move above zero. So combining those two MACDs gives you a better insight into what is going on as far as the stock's action is concerned. So, and you'll see that even as of right now, we haven't seen any crossover below zero on the main MACD. So there hasn't been any crossover below zero going back more than 1 year. So this market has yet to give us a significant sell signal, and that's why it's been moving higher. So just understanding that a crossover above zero is powerful on the whenever you want to go long. If you're really wanting to short this market, you have to wait for a crossover down the road when the market crosses over to the downside and it is trading below zero, and that's going to come at a lower price point, but the point of it is you're going to get a better sustained signal to the downside. Eric Mwathe, good luck, peace, and blessings. Woo!